Introducing Zach Davis and Josh Anderson with the Sound Money Podcast.
Hello, I want to welcome everyone out to this week's episode of Sound Money, Sound Principles, the Believers Podcast. I'm Josh Anderson, one of the co-founders of Sound Money. Alongside me is the co-host, Zach Davis, likewise one of the co-founders of Sound Money and 7K Metals. Zach, how are you?
I'm doing awesome, Josh. Thanks. How are you doing?
Oh, man, I'm doing great. What an amazing last week we've seen in the world. So today, we want to take some time and we want to just talk about the gold and silver market. What's driving this craziness that we're seeing in the marketplace today? And maybe ask some fundamental questions and find some answers to some fundamental questions that a lot of people have around gold and silver. So let's just jump right in, Zach, for a minute. We have seen some incredible things the last 14 days where gold and silver has hit an all-time high. Why don't we talk about that for a minute, Zach? What are some of the factors going on in the world, right, around gold and what's driving gold to be so high right now?
Yeah, that's a good question. And there's a lot of different answers. I think the main reason is just there are a whole bunch of consumers in the world today that are just uncomfortable with what's going on in the environment, right? Inflation is going up. The Feds didn't cut the rate like they said they were going to cut the rate. So it really revolves around uncertainty. And I think this is a really important thing to mention. I just had a conversation yesterday with a wealth manager who didn't understand this concept. And after I explained to him, he's like, oh, that makes total sense. Gold and silver has been the standard for 5,000-6,000 years, right? It's always been a medium of exchange. It is the standard by which everything is measured. And so, we say gold price is going up. We say silver price is going up. But what really is happening is gold and silver are not moving. Like, their prices don't move. They are the standard. What's happening is you're seeing the devaluation of the currencies. So purchasing power is going down. So when you have the price by which gold is measured is the amount of labor that it takes to get gold out of the ground with the dollar, right? So today, because the purchasing power of the dollar is so weak, you have to put in a whole lot of fiat currency dollars into labor to get the gold out, which reflects a higher gold price. So that's just one of the things that's going on is all of this, but I think people are just scared.
It's interesting you say that, Zach. I'll share something here. I was noticing this week in looking at some articles, right, and what was going on in the world and some of those things, right, that I thought, hey, what's really driving what's really driving this in the world today? And let's see if I can share that with you. So I was reading the other day. This is just CNN, which, by the way, I do not subscribe to these guys or watch these guys. Right?
What?
I think it's I know. I think it's
They're
interesting.
So honest.
I know, so honest. But I think it's interesting when even they come around to some of these principles and ideas, right? Why gold prices are at a record high. They published this just a few days ago, right? The 9th of April. It says right here, it's kind of interesting. It says the price of silver reached an all-time high of $2,364 an ounce Tuesday after hitting record highs for the seventh straight session and trading at $23.36 year over year. Gold is up 16% this year. It says investors who expect the Federal Reserve to cut rates, to your point, Zach, in its benchmark interest rate are the main forces driving the price up. But surges in other factors, like including central banks led by China, buying up gold to ease reliance on the U.S. dollar. So we have this interesting phenomenon, Zach, right now going on where, yes, we have immense volatility in the market, which drives consumer spending of gold and silver up. We have uncertainty about the U.S. dollar, but we actually have some bad actors, not even bad actors. We have other nation states trying to come after the U.S. dollar today. And by doing so, they know the fastest, most simple way to do that is to buy up reserves of gold and silver. And so we're seeing that at a record pace. I came across this week, Zach, that was kind of interesting. Another take that came out. This came out a month ago. This was before this was when we hit an all-time high. We were at $2,100. Like, this is like we blew past this, right? This seems like a long time ago now that we blew past this, right? But some of the factors, right, that went into this, again, they touched on the Federal Reserve, but Treasury bonds, right? The Treasury bonds themselves are down, and people aren't trusting them like they used to. So when people don't trust a Treasury bond, they want something more physical. And so we've seen that push up, they believe, by more than another 4%. And then, of course, the uncertainty around the world with Gaza, what's going on in Gaza and what's going on in the Ukraine still. And I just think, these are unprecedented times. I'm going to pull up. This is the gold chart, Zach.
Look at that. Look at that rise.
This is the all-time gold chart, right? Since we've been tracking it, right? I think I'm on the 5.
What year is
that?
Oh
no, sorry. I'm going to go back. I got to go back here. I'm going to change this to all time. All time, it looks, kind of crazy, right? Like from 1970, we started tracking, it was $40. It's just been a continual massive upheave, climb.
Wait, so what year does that start?
This starts actually tracking it in around 1970.
Interesting. Okay.
It was pretty flat through that period before that, right? Between $20 to $30, right? This is interesting. Before the U.S. government went off the gold standard, look, it's really pretty standard.
Year? In what year?
So 1970, when we went off the gold standard, when Nixon came out and in all his glory said the crazy words like, because of the speculators of the US dollar, we're going to take ourselves off the gold standard. Mm-hmm. The speculators were countries, Zach. They were countries saying, I want my gold. I bought US dollars that were backed by gold, and I want the gold. Not speculators.
Yeah.
France wanted their gold. Well, and he said, can't have it.
Yeah, and it was, look, the same thing is happening now as what happened to them just with the U.S. citizens, right? Because it was China, France, all these different countries are saying, Nixon, we think you're printing more money than what you're backing with gold. And they were right?
100%.
That's why they ended the Bretton Woods Agreement, is because they said, we can no longer be backed by gold because all these other foreign countries are going to hold us accountable. And we can't print all the money we want.
Yeah, and so from the day that they've done that, right? From the day they've done that in the United States in 1970, we've just seen gold just go up, right? And I don't care what you invested in the world. Maybe you don't invest in gold. Maybe you're listening to us and you're not a gold guy or girl. That's cool. But I'm here to tell you, if you can find a asset class in the world that can do this, right? That just this continual up, right? Yeah, do we get to a high here in the 2014, then we drop back down a little? But we've shattered back through those things, right? Like you can't do this with very many investments in the world, right? See this kind of a growth. And it's strictly based on inflation. You said something, Zach, earlier that I just, it's amazing to me. It isn't that gold and silver became more valuable. It isn't that it's magically worth more. It just costs more to get out of the ground. Diesel costs more for these guys to get out of the ground. Labor costs more. Chemicals to refine it, to pulverize it if it's in the granite rock still. That all costs more money. And that's the reality, right? And what it costs to get out of the ground is what it's worth today. And just so happens that we're seeing this massive growth. Zach, do you think there's anything going to dramatically change in the next few years that all of a sudden we're not going to see gold continue to rise?
No. I don't know where gold's going. I'm not even going to make any predictions. But all I know is if you look at the trajectory, it doesn't matter. By the way, it doesn't matter whether you get a different administration than the one we currently have, and whether you like them or whether you don't like them. The fact of the matter is the way we're printing money and the way we have our fiscal and monetary policy, there's really only one way that gold can move. And it may come down and make some corrections, but over the long term, and I think the chart you just pulled up, Josh, proves the point of what we're talking about. Because if you look at 1970 when they started tracking it, and 71, gold was flat before that. Why? Because everything was connected to gold, right? They couldn't print money unless they had the gold to back it up. But as soon as they severed that tie, all of a sudden now you can have this printing and this government spending that is not accountable to anything. And if you look at and that chart showing the price of gold going up, if you were to flip that over and put a dollar amount to it, a dollar instead of gold chart, what you'd see is the purchasing power of the dollar diving, not gold going up, right? So it's relative to, it's the same standard. And so, I mean,
so
what are we changing that's going to make it better?
Yeah, you're referring to our good friend here, right? Book I have on the shelf. You do too. Our good friend G. Edward Griffin, right?
Yeah.
He lays out this principle in his book, The Creature from Jekyll Island. It's probably one of the holy Bible of precious metals, right? Of understanding the Federal Reserve, gold and silver, and how they interact together and how they're actually in opposition. And he spells that out, right, in his book, that those principles and those ideas. And so, yeah, we're not going to see dramatic changes in the next few years or decade that's going to dramatically make it so gold isn't going to continue those trajectories. It's just not reality. We have a lot of people, Zach, two kind of topics I want to touch on for a minute today. One, we'll come back to this one. Why aren't we seeing the same explosion in silver? So we're going to come to that one in a minute, because I think a lot of our listeners would want to know, kind of what we see in the space and why silver isn't taking the same leaps today. But more importantly, let's talk for a minute. We get asked this question every day. Like I can't, my phone's over here. I can't not get this text every day right now. Okay. A text like the following. This is an awesome person, lives out in Louisiana. Hey, Josh, have I missed the chance to buy gold? Am I too late? Why you laughing, Zach? Why you laughing?
So let me share a quick story with you. Everybody has to do life from their own life experiences, right? And their own perspectives. And we all make our decisions based off of what we know, what we understand, and the experiences that we've had in life. So I can distinctly remember when I was probably 15, 16 years old, we were driving down the road and my mom and dad had a small farm and there was a farm next to ours. And my dad said, I remember this like it was yesterday. He said, my dad could have bought that farm right there for $900 an acre. And I said, Dad, why didn't he do it? I mean, that farm right now today is going to sell for $20,000 to $25,000 an acre as farm ground and $75,000 to $100,000 an acre in our area as development ground, right? Yeah. And here's what he said. He said, back then, $900 was a lot of money. And so to sort of put an exclamation point behind it and underscore it, it's never a bad time to buy gold and silver, because we might... I promise you, if some of you went and talked to grandma or grandpa and said, hey, should I buy gold? They're going to tell you, you should always buy gold. It's always a good time to buy gold. Because I promise you, there are lots of people sitting on this podcast right now listening going, man, I wish I would have bought gold when it was $200 an ounce back in the 90s. Yeah. Is it ever going back to $200 an ounce? I got no idea. But my speculation is it even going to get close? So a lot of people will sit and wait, right? And they'll try to time the market, and they'll try to, wait, man, if it goes back to $2,100, I missed it. But if it goes back to $2,100, I'm going to get in. So what ends up happening is you get down 10, 15, 20 years down the road and you didn't end up buying any, and now the price is gone. So in the world of, we're not giving investment advice, right? But in the world of investing, I used to study this a lot because I have my Series 6, 63, 65, some of my licenses, right? And one of the principles that we always taught was dollar cost averaging, right? You just always buy. So you average the cost over time. But I mean, let me ask you this. If something really bad happens and the world does end up all burning down on fire and gold and silver is the only thing you got, do you care if you pay $2,500 an ounce for it when it's the only thing you can use? Right? It's like, exactly. You should just always have some.
Yeah, I'm kind of the same as you. My mind goes to a gentleman who in 2016, when we started the company 7K Metals, this gentleman said to me, man, I think I've missed the boat. Gold's at $1,650 an ounce. And I remember saying to him, I said, well, I'm buying at $1,600 an ounce. To this principle that Zach just shared, I think it's always a good time to be buying, right? And it's a discipline that I'm going to do. And I always look at it, I'm not buying anything. I'm just converting my fiat dollars that are overinflated and going in the garbage into sound money. Right. And I remember that gentleman saying, well, I'm going to wait for it to come down. And he never bought. Right. The same gentleman I see on a once a week basis in one of my other companies. He helps out in one of my other companies, does some consulting work and some side work. The other day, he walked into my other building, Zach, and he said, "Can you believe that gold just went above $2,100?" He said, "Man, I wish I'd have bought at 1,600. The reality is, right, we got to live in the moment. We got to realize that things like gold and silver, dirt, other things, they continually over time increase in value. That's been history. And that there's never a bad time to buy. And so I would say this, right, to the gentleman that texted from Louisiana that I texted back today, I'd say, buy what you can buy. If you can buy, and this is, by the way, one of the reasons why we founded a company called sound.money is because there's never a wrong time to buy, even if you have just a little bit of money. Maybe you don't have $2,100 an ounce today, or $2,300, dollars an ounce today. But guess what you do have? $50. Maybe you don't buy the Pepsi. Maybe you don't go to dinner tonight, right, with your family. Maybe you don't take your wife out to a $200 dinner or a $100 dinner. Maybe you buy another $100 in gold. That's why it was so important for us to start that company, is because the principle of buying a little bit every single month, whatever I can afford, whether I can put aside $100, $1,000, $5,000, whatever it might be, right? You'll be better off in the future if you do that. And it's been really fun for us, Zach. Like, we've now watched tens of thousands of people take that philosophical idea of fractionally buying it when it's available, when you have a little bit of funds available. And we've watched tens of thousands of people change their life because they now have dollar cost averaged over the last 4 years with sound.money to do that. And to me, it's amazing, right? So I think that, would you agree that that's probably the philosophy?
Yeah, and 100%. It's like, I mean, if you're going to speculate on gold and you're going to try to make a bunch of money trading the gold market, you better be really, 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 really good, right? You better be really good. But but I don't think the philosophy that we're talking about here is necessarily trading gold. Like we, it's kind of fun to watch. We have like a $8 or $9 million account that we do see some trading going on, right? It's like, yeah, big losses sometimes and big wins. And these guys are like professionals. This isn't what we're talking about. What we're talking about is well, for me personally, okay, I don't ever sell anything. So when people ask me, like, well, if you're going to buy at $2,500 an ounce, when do you think you're going to sell? I'm like, I'm not. This is financial insurance to me. This is a hedge against inflation. This is a hedge against bad monetary and fiscal policy at the U.S. government or world governments. Look what Russia's doing right now, right? They basically just flipped the bird to the United States and said, we don't care if you're going to sanction us. What we're going to do is we're going to buy up all this gold and we're going to run our country on gold. Well, hold on a minute. You got the BRICS nations doing the same thing. So it's like, if what we perceive are the smartest people in the world who are running all these countries and the central banks are buying up gold, what are they doing? Are they speculating with it? Not in the form of like speculating trying to make a profit. They're speculating on the fact that everybody else is going to screw up and they want to be sitting on most of the gold when it happens.
Yeah, I would agree. I would say a person should never speculate on physical gold and silver. The physical gold and silver you buy is never for speculation. It's never for increase. That's not what you buy it for. You buy it for the same reason you said, that if every central bank in the world is buying it and all these countries like India, Russia, China are buying it to hurt America, they're not buying it for it to go up to $2,500 next month on spot price and sell it.
They don't care.
They're doing it. They don't care. It's a hold play. If you want to speculate, go find somewhere to that's why paper trading exists, right? That's why that exists. That whole market, that whole world exists, if that's what you want to do. But when you buy real physical gold and silver, and you have it stored in a vault, and you use something like sound.money to have the physical usability of it, now you're really winning. I guess the most powerful, impactful thing that you can do in your life, right? So I guess I would just say, right, like, the same advice I've given now for almost 8 years to people. When they ask the question, I'd say buy every single month. The real power in this world, Zach, I've heard you teach about it, I've heard you talk about it, is consistency and a regularity of schedule. You want to talk to that for a second? Like what does that philosophically, what does that do for people if they actually have, like, they put their gold and silver purchasing more on like autopilot? What does that actually do for them?
Well, I mean, it creates the discipline, right, and the stability, and it does the dollar cost averaging on its own. The problem is most people get in this speculative mindset, and they're like, "Oh, I'm going to wait. I think gold's going to drop, and then I'm going to buy." And then another month goes by, and another month goes by, and they don't do it. But if they just put it on autopilot, then it's like set it and forget it. You don't have to think about it. You know that you're putting a little bit away every single time as a hedge against inflation, that financial insurance that's just adding up in this account over here. And the beautiful part about sound.money, which by the way you brought up, is it creates a liquidity. Like if you over speculate a little bit about what your passive income is, and maybe you buy a little bit more than what you probably should have, and you're like, oh, I need to get some of that back. You don't have to go fight the pawn shop, right? You don't have to go take it someplace, or you don't have to ship it anywhere. If it's sitting in the SoundMoney wallet, it's like, okay, jump back on and go, well, I really need $1,000 back, right? And it creates the liquidity. So it's the usability of gold and silver now. So it puts a lot of the fear away of like, hey, if I get a little too aggressive here by just buying this every month, you have liquidity that makes it much easier to get back into a fiat currency to be able to spend it, right? And so I think it's a big deal to put it on autopilot, because people who sit and think about it, I think we would all agree we are busier now than we've ever been, right? Technology is supposed to make our lives better, but it actually makes our lives busier. And so if you have to think about it every month to go do it, you're probably not going to do it. And by the way, you put everything else on autopilot. You pay your Netflix on autopilot. You probably pay your car payments on autopilot. You probably pay your mortgage on autopilot. Like, you have auto draft on everything. You don't think about hardly paying a bill anymore. And so what you really ought to be thinking about with gold and silver is this is the bill you're paying to yourself to pay your financial insurance to hedge against inflation. And just set it and forget it.
Yeah, and that's, I probably can't say these things yet, but maybe I can. We're turning that functionality on. We just came out of some meetings recently. We're turning that functionality on at sound.money for the tens and tens of thousands of users of that on a monthly basis to be able to do that there, so that they can just have it on autopilot, right? And they can choose, can I afford $50 a month, $100 a month, $1,000 a month? Like, what am I going to put as my hedge against my personal inflation problem? And so it's pretty awesome. It's pretty awesome. Well, Zach, in closing the day, I think I wouldn't mind maybe taking a few minutes. I've had this question a lot lately. One of the beautiful things about what we do, for people that don't know us well, you and I, we own businesses in lots of sectors, and lots of different sectors from this sector, gold and silver, we become quite experts in, around the world, but also in the oil and gas sector, and in the real estate and investment opportunities in dirt, and in investing. These are sectors we own businesses in, and in the recreational spaces. And one of the fun things for me is like when people ask serious questions, right? I had a gentleman reach out to me on a phone call, and he said, why is silver lagging so far behind gold, right? And I'll bet there's a lot of listeners wondering, gold's been on this massive spike for 2024. Silver's increased, but it's kind of been drug along a little bit, but it hasn't seen the gains that gold has seen. And his follow-up question was, does that mean I should buy silver, right? And again, I'm not going to speculate and tell people where it's going, but at the end of the day, I shared with him my thoughts. I'll share them with the listeners, and then you can share with us, Zach. Silver has been in a unique position. The reason gold has had such a spike, we mentioned before, was the major countries, China, India, Russia. They have bought so much gold. That's driving the price. They're bigger than any other institutional buyers in the world, right? And they're capturing so much gold out of the marketplace. But they're not doing that to silver. So that pull for all the gold is not happening on the silver market by those institutional countries that are trying to hurt the United States. At the same time, though, we see an increase. So silver production, if you look at the silver production numbers, they're up around the world. If you look at silver recycling numbers, they're up around the world, higher than they've ever been. We also see silver usage is up around the world in everything from cell phones to solar panels to you name it, right? Every medical device, MRI machines, you name it, right? It's in everything now. We're talking right now over the internet, and silver's making it a reality, all right? But in that vein, right, Zach, do you think we could see an additional pull in silver? That's the question, right? What are we seeing in the silver market? And what should people kind of look towards in the future? Is that a market that we're going to see silver continue to pull back? I mean, silver's all-time highs was $50, around $50, and we're not there yet, right? We're not back to that. What are we seeing as we talk with the leading mints and the leading sellers of gold and silver around the world?
Yeah, I think, and by the way, my personal philosophy is I buy a little bit of both, right? I like to have both of it. So I personally think that we're going to see silver prices continue to go up, right? It's just, I mean, there's supply and demand stuff going on. There actually used to be a ratio where gold and silver never deviated much from each other. And we don't see that ratio anymore. I'll give you I'm gonna put my tinfoil hat on. Okay. This is my conspiracy theory speculation. So I think some of the stuff that's going on with silver right now is, if you look at look at corn, look at wheat, look at beef, look at all these different commodities. Anytime there is high demand and huge inflation, what you end up happening is the government steps in and they subsidize things, right? Because we can't have bread be $15 a loaf. You just can't do it, right? And so what they do is they go subsidize the wheat, and they pay the farmer more, right? And so I think we're seeing somebody like this is my tinfoil hat. I don't know who it is. I know JP Morgan did it a while ago, and they got like a $40 million fine for shorting the silver market. But there is something going on out there where there are certain actors who are suppressing the price of silver, whether they're shorting it because they're trying to drive the pricing down because they hold so much of it, and then their play is to go pump the price and sell it. Or you're starting to see, just like you mentioned, the utility value of silver is higher than gold right now. In other words, when I say utility value, what that means basically is there's silver in more things than there is gold, like medical instruments and supplies and all those different things. So again, if it's widely used, you can't have silver go to this extremely high price. The government can't have silver go to this extremely high price, and then we're using it as utility, and then all of a sudden the cost of goods and services goes through the roof, right? So I don't know what's going on there, but my feeling is you can't control that forever. And silver's going to, at some point, make its play, right? And I don't know what that is, but I do think over the long term, you're going to see silver continue to creep up and test that $50 range sometime. 5 years, 20 years, 50 years, I don't know. But I think you'll see it keep going up.
Yeah, I would agree. And I feel like, that ratio's always been pretty in balance until the last 7-8 years. Gold and silver have been within a really marginal rate of 14 times different now. And we just are seeing it, 14% different. And it's just way out of whack. And you're probably onto something there. You got your tinfoil hat on. I might not go down that same rabbit hole and wear mine, but I do think, right, that your point is very valid. It's in so many things. I mean, I had to look at. I was looking to get the new iPhone the other day. Do you know these things, Zach, are like? Have you tried to buy one of these lately?
Yeah, good luck.
This is ridiculous, right? Like the new one, they want like $1,600 for a phone, right? That, and you're right? It comes back to this. It's the usability and the functionality of silver, right? Gold has always been the medium of exchange for the world, but silver has been the utilitarian metal that the world needs to work. And as it gets more popularity and more use cases, yeah, we might see governments of the world and others trying to manipulate it and hold it down and things. But even when they try and do that, right, we're seeing an increase in it today. We're seeing a growth. And I just go back to what you said earlier. I buy both, right? One of the reasons why we started sound.money was just that very reason, right? That we needed people to have a multiplicity of asset classes that allowed them to buy what they needed or what they wanted, right? That's why there's silver eagles and gold eagles. That's why there's silver bars and gold bars, right? What does a person want. And for me personally, right, it's both, right? There's a use case for both. And deep down, Zach, I'm a gambler.
Yeah, me too.
Deep down, just a little bit of a
Just
gambler.
want to see.
At the end of the day, we're just entrepreneurs who, oh man, I just want to gamble a little. I love it. And not gambling. I don't go to casinos. I don't go gamble on football or those things, but we gamble on business every day, right? Like that's what makes us drive and get excited. And so, yeah, the useful cases of silver given an opportunity that many in the world seem to think is really going somewhere. And so,
yeah. And I think, by the way, I think if I can, just one final topic. You mentioned the cell phone, right?
Yes.
$1,600 to buy this thing now. Like, you don't ever own your cell phone. You make payments on everything. You don't own anything anymore. But, I mean, is this thing really worth $1,600 anymore? Like, is it really worth No, it's not. Like, the purchasing power of the dollar has gone so far down that's how many dollars it takes to purchase this thing now, right? It's not because this is computing power is better. It's not because it's 16. I mean, I don't even know what version this is, but I think maybe I paid like $800 or $900 for this thing. So, I mean, even if I paid $1,000 for this thing that was last year's model, you tell me that it got $600 better?
Not a chance.
No, your purchasing power got $600 less.
Yes.
And this I think is really interesting too, by the way. I have had so many conversations with other individuals who run very successful businesses that are good friends of mine. This is the theme that I have heard over and over and over again as we have conversations. They're like, and please, however you feel about COVID, whatever. But I have had so many people say I made more money during COVID than I've ever made. Yes. Right? But I went and looked up today's savings rate in America. You know, so over the years, the long-term average is about 8.4% is what Americans save of discretionary income. Okay. So last year it went from, now 4.6 is the short term, went from 4.6 to 3.4 last year. If people made more money during COVID than they ever made, and it's really because the government printed so much of that stuff, then why do we see the price of goods and services at an all-time high? And why do people feel like they're broke and have less money than they've ever had, right? Again, gold's not going up. The purchasing power of your dollar is going down. And it shows in all the charts. It shows in all the numbers of what the dollar's doing and prices of goods and services.
I love it, Zach, because I'm holding here, right, one of my SoundMoney 100-ounce bars, right? Like when I use sound.money and I say, you know what, I want to have one. Like, send me one to my house, right? Like, there's what it comes, right? This 100-ounce silver bar, right? And I was recently with a gentleman, way cool story. Like, just, I mean, awesome. It's the reason why we started these companies. I'm with him. He said in 2020, he decided him and his wife wanted to buy a house in 2020. But they didn't have enough money for the down payment, right? They had money, but they had $25,000 and they needed $50,000. Okay. And in 2020, he came to a seminar where you and I were speaking. And after listening there about this very topic, purchasing power, gold and silver, what do I do? He decided to take that money, that $25,000, and he put it in sound.money. And he bought assets there, right? He bought gold and silver because he believed in this idea that inflation was going to eat away his dollar. If he put the $25,000 in his bank account, that in the future it would be worth less money and buy less goods and services. But if he bought gold or silver, then it would hold its purchasing power. Gentleman came back to me 1st of January 2024, so 4 years later. And he said, wow, my wife and I are now in a position to close on a house. I liquidated my gold and silver holdings at sound.money. Do you know that when I took it out, that $25,000 was now $36,000 in purchasing power? Now, so he didn't lose. If he would have left it in the bank, right, he would have lost that difference, that purchasing power difference. But now, because he held it, and my point is here, he held it for 4 years in an asset. He held it in gold and silver. And that's how I look at gold and silver. It's holding this purchasing power. So for me, right, it's everything you just said in your last ending remarks, that we buy gold and silver as a hedge against inflation and poor government decisions. That's why we buy it, you and I. And that's why we started companies to help the average people buy it too, right? And so for hopefully today, with you spent a few minutes with us, you got some answers to some of your questions about, should I buy it? When should I buy it? Why is it so high? And just know, from our perspective, it's always a good time. Like, always, 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 if you're using it for those mechanisms for protection against poor government decisions and hedge against inflation. So, Zach, last words before we let everybody go this week.
Go get you some gold and silver.
All right.
It's always good to buy.
Well, it was awesome to be with you today, Zach. Can't wait till next week when we get together for the Sound Money, Sound Principles Believers podcast and share other awesome and amazing topics with the listeners. So you guys have a great week. Can't wait to see you next time.
All right. See y'all.